Some of you are going, oh, it's artificially high, it's going to go down. No, it's not.
There's been a legal saga over real estate commissions south of the border.
100% of real estate prices is based on supply demand.
The industry has until mid-August to implement policy changes relating to commissions.
Is the real estate market really about to crash? According to Dave Ramsey, the answer is a resounding no. Dave's been saying this for weeks, and he's adamant that real estate values won't drop in the next 5 years. Some people might think prices are artificially high and due for a fall, but Dave's confident that's not going to happen. Why is there a divide in opinion? Dave has been in real estate for 30 years and he breaks it down simply. It's all about supply and demand. When there are more buyers than sellers, prices go up. When there are more sellers than buyers, prices go down. Various factors like inflation, recession, high interest rates, and even political scenarios influence the number of buyers and sellers, but the core equation remains the same. For prices to drop, the number of buyers must significantly fall below the number of sellers, and that's not happening. Here's why Dave's so certain. This year we have 128 million households compared to 116 million households in 2007. That's 12 million more households needing homes. In 2007, there were 2.1 million new housing starts, but this year it's only 1.4 million. The current inventory of homes for sale is just 50% of what it was in 2007. Why are home prices still climbing despite sky-high mortgage rates? To the disappointment of would-be homebuyers, property prices just keep rising. It seems that nothing, not even some of the highest mortgage rates in the past 2 decades, can stop the continued climb of home prices. Are they destined for a fall? Here's what other experts say about a potential housing market crash. You know, it's kind of funny how things turned out in the US housing market. We all thought it was finally going to take a breather in late 2022, and home prices were supposed to cool off a bit. But then, out of nowhere, they started climbing again. It's like the whole idea of a post-pandemic housing slowdown just vanished into thin air. Skylar Olson, a chief economist, is also on the same page about this supply and demand thing. She's predicting that home prices are going to keep going up this year. That's awesome if you're someone who's already in the game and looking to sell, but not so much if you're a first-time buyer trying to get your foot in the door. Olson put it pretty plainly. We're just not in a place where homes are suddenly going to be more affordable. And it's not just a feeling. Numbers are backing this up. The May 2024 Housing Market Trends report showed that because of high mortgage rates, the monthly cost of financing the typical home after putting down 20% has gone up by 7.1% from last year. That's a big jump, adding around $158 more per month per payment compared to May last year. That's definitely not a small change. But here's the thing, even with all of this going on, most housing economists and analysts aren't predicting a huge market correction. They think it'll be pretty modest, and they're definitely not expecting the kind of price drops that we saw during the Great Recession. Another economist from First American Financial Corporation named Mark Fleming also believes there's just not enough supply out there to meet the demand, and that's Economics 101. It's a pretty straightforward situation. Dave Liniger, the founder of Remax, had an interesting take on this too. He pointed out that the big jump in mortgage rates has kind of messed with the market. A lot of people who were thinking about buying are just sitting tight, waiting for rates to come down. But here's the twist. If rates do drop significantly, it could trigger a whole new wave of buyers to jump into the market, and that could push home prices even higher. He talked about pent-up demand from a whole generation of buyers, and with too little inventory to go around, if interest rates start to fall, we could be looking at another boom and bust cycle. It's a fascinating situation. Now Lawrence Yun from the National Association of Realtors chimed in with his thoughts. He noted that in some really hot markets like Austin, Texas, there have been small dips in prices, but he's not expecting a widespread drop in prices anytime soon. He's pretty confident that prices will stay strong and won't go down on a national level. The consensus is that the housing market is in a unique position right now, with a lot of demand and not enough homes to meet it. Unless something drastic changes, home prices will continue to hold steady or even rise. According to a survey, the average interest rate on a 30-year mortgage was 7.04% as of July 10th. That's a pretty hefty number, isn't it? Now, the National Association of Realtors has been monitoring home sales, and they've noticed a dip. From April to May, existing home sales dropped by 0.7%, and from May 2023 to May 2024, the fall was 2.8%. It's not a huge drop, but it's something to keep an eye on. Here's another fun fact. The median sale price for homes in May was $419,300. That's the highest NAR has ever seen. So we're talking record-breaking prices here. In terms of the housing market's health, we're looking at a 3.7-month supply of homes in May. That's better than April by 6.7%, but it's still not where we want to be for a balanced market. Ideally, we'd be sitting at 5 to 6 months of inventory. On the foreclosure front, there were 18,574 homes with some kind of foreclosure filing in June. That's a big drop from the year before, around 22.7%. In Illinois, it had the highest foreclosure rate, with one filing for every 3,041 housing units. Remember the housing market crash from 2005 to 2007? It was a wild time, and when that bubble burst, it led to a massive economic downturn. Now, with mortgage rates shooting up and people worried about a recession, which, by the way, experts give a 33% chance, everyone's wondering if we're in for another housing crash. But here's the thing, housing experts don't think so. They're saying that even if prices do dip, it won't be anywhere near as bad as the Great Recession. Why? Well, homeowners today are in a much better spot than they were 15 years ago. They've got great credit, loads of equity, and those fixed rate mortgages locked in at low rates. In fact, one analysis found that at the end of 2023, around 70% of US mortgage holders had rates more than 3 percentage points below the current market rate. And let's not forget the builders. They've learnt their lesson from the Great Recession and have been playing it safe with construction. That's why we're still dealing with a shortage of homes for sale. Lawrence Yun from NAR put it well, we simply don't have enough inventory. He also mentioned that while some markets might see prices go down a bit, a repeat of a 30% price drop is super unlikely. So while it's not all sunshine and rainbows, it doesn't look like we're heading for a housing market disaster anytime soon. Ken H. Johnson, a housing economist at Florida Atlantic University, thinks the market's kind of stuck between a rock and a hard place. He's expecting home prices to stay pretty flat across the country. On the other hand, mortgage rates are pushing prices down, but on the other hand, there's a lot of demand for homes and not enough supply, which pushes prices up. These forces are kind of cancelling each other out for now. So it looks like the housing market's in for a bit of a balancing act. It's not going to crash like it did before, but it's not going to be a cakewalk for buyers or sellers either. Alright, let's break down why housing economists are pretty confident that we won't see a housing market crash anytime soon. First off, it takes time to buy land and get through all the regulatory hoops, so we're not seeing the kind of overbuilding that we did 15 years ago. Greg McBride from Bankrate hit the nail on the head. The big issue is too much demand and not enough supply. It's going to take time to balance that out. Secondly, there's a lot of demand for homes, and it's coming from all sorts of places. During the pandemic, a lot of people realised that they needed more space, especially with remote working becoming a thing. Then you've got millennials, a huge group that's right in the middle of their home buying years, and Hispanics, a growing demographic who are also looking to own homes. Third, lending standards are still pretty strict. Back in 2007, you had these liar loans where people didn't have to prove their income. Lenders were handing out mortgages left and right, no matter a person's credit history or how big their down payment was. Today it's a different story. Lenders are being tough with their requirements, and the people getting mortgages usually have great credit. In the first quarter of 2024, the median credit score for new mortgage borrowers was 770, according to the Federal Reserve Bank of New York. That's a high bar. If lending standards were to loosen and we went back to the crazy days of 2004 to 2006, then we might worry about a crash. But right now, the opposite's happening. Lending standards are actually getting stricter. It's a different situation than we've seen in the past, and the factors at play now are keeping things more stable. What do you guys think? Share your thoughts in the comments section below. Hit the like button and subscribe to our channel for more engaging content. See you in the next one.